Your 2025 books are wrong, and here's what it's costing you. I just spent 14 hours fixing a business's 2025 books so their accountant could prepare their taxes. The client is now looking at an extra $3,800 in accounting fees and a 6 week delay in filing. And they genuinely thought their books were in good shape. I'm Bev from bookkeepingcoach.net. I've been cleaning up year-end books disasters for 30 years. Right now, in early January, is when I get the most panicked calls from business owners who just sent their books to their CPA and got told, I can't work with this. You need to clean this up first. Let me walk you through what happened with this client because their story is incredibly common. They run a small marketing agency, 5 employees, about 20 active clients. They use QuickBooks Online. They have a part-time bookkeeper who comes in twice a month to enter their transactions and reconcile the bank accounts. Everything seems organized. In early January, they send their 2025 profit and loss statement and their balance sheet to their CPA. Here are our financials, ready for you to prepare our tax return. 3 days later, the CPA calls. I've reviewed what you sent me, and I can't prepare your tax return from these books. There are just too many errors. You're going to need to get these cleaned up before I can even start. The business owner is stunned. What do you mean? My bookkeeper has been keeping everything up to date all year. We reconcile every month. What's wrong? The CPA starts listing issues. Your bank reconciliation shows $4,700 in unexplained differences. Your revenue appears to be recorded twice in multiple instances. Personal expenses are mixed with business expenses. Your credit cards have never been reconciled. Your loan accounts don't match what you actually owe. And there are several other issues I would need to dig into. The business owner calls me in a panic. Can I fix this? How long will it take? I pull up their QuickBooks file and immediately see what happened. The bookkeeper was doing their job, but they didn't know how to do the bookkeeping correctly. They were entering transactions and making things balance, but they were taking shortcuts that created massive problems. Here are the specific issues that I found. First, the bank reconciliations. Yes, they were marked as complete every month, but there were unexplained differences almost every month. Instead of finding and fixing those differences, the bookkeeper was adding journal entries to force the account to balance. A $127 difference here, $315 there. Over 12 months, those forced balancing entries added up to $4,700 that couldn't be explained. That's a huge red flag to any CPA. If you can't explain where $4,700 went, how can they trust any of your financial data? Second, the revenue issue. The business invoices clients through QuickBooks. When they create an invoice, QuickBooks records the revenue. Correct. But when the payment comes in, someone was creating a second revenue entry. So every sale was being recorded twice. This had been happening on and off all year long. Their income was overstated by about $31,000, which means they paid quarterly estimated taxes based on income they didn't actually have. They overpaid their estimated taxes by about $7,000. That's their money sitting with the IRS instead of in their business. Third, personal and business expenses were mixed together. The owner had been using the business debit card for personal purchases, groceries, kids' sports registrations, personal Amazon orders. Those expenses were all coded to business categories. The CPA can't just claim all of those as business deductions. They need to be separated. But now, someone has to go through 12 months of transactions and identify which were personal and which were for business. Extremely time-consuming. Fourth, the credit cards. The business has 2 credit cards they use regularly, but they were only recording the payments when they paid the bill. They weren't recording any of the individual purchases. So all those expenses, meals with clients, software subscriptions, office supplies, travel, they weren't categorized correctly for tax purposes. When I ran the books through my standard year-end checklist, 23 different checks that I do on every client's books, I found 8 more issues. Inventory that didn't match their physical count, accounts receivable with invoices from customers who had already paid, prepaid expenses that should have been expensed monthly but were sitting on the balance sheet. The bottom line, this was going to take me 14 hours to clean up completely. Plus, the CPA still has to prepare the tax return, which will now be delayed by 4 to 6 weeks while we fix everything. And here's the kicker. The business owner had been paying their bookkeeper all year, about $800 a month. They spent $9,600 on bookkeeping in 2025 that ended up with books that weren't usable. So what actually needs to happen at year end to make sure your books are clean and ready for tax preparation? First, every single bank account and credit card needs to be properly reconciled through December 31st. And I don't mean just marked as reconciled. I mean actually reconciled with 0 unexplained differences. Every penny needs to match between what your bank says and what your accounting software says. If you have unexplained differences, that means there's an error somewhere. You need to find that error and fix it. You can't just add a journal entry to make it balance. Second, you need to review all of your revenue for the year to make sure it's not being double counted. This is especially important if you invoice customers through your accounting software. When you create an invoice that records revenue, when payment comes in, you're recording the payment against that invoice, not creating new revenue. If your revenue looks higher than expected, or if your accounts receivable balance is negative, those are signs that you might have duplicate revenue. Third, all of your expenses need to be properly categorized for tax purposes. Different types of expenses have different tax treatments. Some expenses are fully deductible, others need to be capitalized and depreciated. Some expenses are only partially deductible, like meals with clients, which are 50% deductible. And some aren't deductible at all. Your CPA needs to look at your expense categories and know exactly what each expense is and how to treat it on your tax return. If everything is lumped into operating expenses or miscellaneous, they can't do that. Fourth, if you have any loans, the accounts need to show the correct balance as of December 31st. People record loan payments as an expense, which is wrong. The loan payment is partially principal, which reduces your liability, and partially interest, which is an expense. Fifth, accounts receivable and accounts payable need to be reviewed and cleaned up. Are there old invoices that should have been written off? Customer overpayments that should be refunded? Duplicate vendor bills? Sixth, if you have inventory on your year-end physical count, needs to match what your books say. If it doesn't match, you need to figure out why and make adjustments. Inventory affects your cost of goods sold, which affects your profit, which affects your taxes. Seventh, you need to verify that your opening balance for 2025 exactly matches your closing balance for 2024. If these don't tie together, your entire year is wrong. And finally, you need to make sure any personal expenses have been removed from your business books. These need to be identified and reclassified before your tax return is prepared. There are 23 specific checks I run on year-end books before handing them to an accountant. Most business owners don't even know these checks exist. So where does this leave you if you're in early January and you're not sure if your books are actually in good shape? Option 1, you go through everything yourself and do a thorough year-end review. This is doable if you know what you're looking for and have the time. The challenge is most business owners don't know what they don't know. Option 2, you ask your CPA to review your books before they start your tax return. The problem is, if they find significant problems, you're either cleaning them up yourself under time pressure or paying the CPA to do it at their hourly rate of $275 or $350 an hour. Option 3, you bring in someone who specializes in bookkeeping cleanup to review your books and fix any issues before your CPA sees them. This is usually the most cost-effective. The worst option is to just send your books to your CPA and hope for the best. If there are significant issues, you end up in crisis mode. If you're not sure whether your books are actually ready for tax preparation, or if you suspect there might be issues but you're not sure how to fix them, I can help you figure out what needs to happen. I do year-end books reviews where I go through everything, a detailed checklist. I identify any issues that would cause problems for your CPA, and then we figure out the best path forward. The goal is to make sure that when you hand your books over to your CPA, they can actually use them to prepare your tax return without delays or extra fees. I've put a link in the description below where you can book a call with me. We'll talk about where you are with your year-end closing, what issues might exist in your books, and what needs to happen before your CPA can start your tax return. The earlier you address this, the better. Don't wait until your CPA tells you there's a problem. The link is in the description to book a call. Year-end bookkeeping is one of those things that seems straightforward until you get into the details. A lot of business owners assume their books are fine because they've been keeping up with things all year. But there's a big difference between entering transactions regularly and having books that are actually clean and accurate for tax purposes. Don't wait until your CPA tells you there's a problem. Be proactive and review your books now. If you found this helpful, subscribe to the channel. We're covering year-end and tax season issues all month long this month. The link is in the description if you need help, and I'll see you in the next video.